Hello and welcome to a brand new show of CEO at Work. We are bringing the show back after a long break, but we are coming back with a bang. And my guest on the show today is someone who has made the impossible look easy. He's presided over a bank and a financial institution where in last decade we saw twists and turns in the entire banking sector. But for a franchise which was local in nature has now become a formidable or has a formidable presence in India. We are talking about Shyam Srinivasan of Federal Bank. So nice to have you on ET now. Thank you for joining us.
Thank you.
And we are talking to you at a time when you are almost 48 hours away from retirement.
Yeah, that word suddenly is jarring, but yeah, I'm literally 72 hours. Give me one extra day, right?
The show goes on tomorrow.
and I'm paid till Sunday, so I want to believe that it's a little longer. But yeah, it's true. 14 years coming to an end.
And my introduction perhaps was the first question in itself, which is that last 14 years we've seen the twists and the turns in the banking sector. For a franchise which was very local, has now become a formidable India player. And if all goes well, perhaps Federal Bank is on course to touch a pat of 4,000 crore in coming year. And under your tenure, if the numbers are I just want to put these numbers for our viewers here, that the profits have become almost 9 times, deposit is 8 times, and every account it's been 7 to 8 times growth.
Yeah, Nikunj, it has been good. It's been one heck of a journey. Like you mentioned, I think the most heartening fact is that we've seen growth on a sustained basis. We have not had yo-yos, and probably that is part of the strategy of not trying to be too cowboyish in any zone, in any period of time, and that served us well. And I have to draw my all-time favorite and bring in the boring aspect of becoming like a Dravid kind of thing. Just play long, just be at it, and I think that's worked well for the bank. And we've today closer to 1.3, 1.4% market share in the the overall business size. And that was about 0.7, 0.8 around the time I came in. So in some ways, we've doubled our market share, which is what we had set out to do, if you recall. One of the things we had said that we want to be, we were prominent in one market. We wanted to become dominant in that market and become prominent per India. In some sense, I can say that we are knocking on that.
What is your market share now?
Overall market share is about 1.3, 1.35 to pick the number. And if this momentum continues, certainly we're gaining around 4-5 basis points every quarter.
Okay.
Right. So hopefully in a couple of years we will be closer to 1.6. The beauty about Indian banking, and you know it better, take the top 5 out, which occupy 50% market share. There's a long tail with everybody in the 1.5 to 2%. So for us as a bank, from the 1.5 to 2 to 2.5 is not different from any other bank. We are reaching that space. That's why I think you also mentioned in the top league of banks. So I do believe in a few years we'll earn the right to be in the top 10 pan-India across public-private and top 5 in the private sector if this momentum continues, and I don't see any reason why it should not.
How do you define growth? Is it profits? Is it market share? Is it number of active accounts? What is your definition of growth at Federal Bank?
I think, ultimately it's what our aspiration line is to be most admired, right? Size in itself is not the only measure, but to be a very niche most admired is less attractive than being a meaningful size player which is most admired. So I think if we keep this 18-20% growth on a sustained basis, which I see should happen, or if we get a 2% market share as a bank, we are off. Like I told you, it's a long tail country, right? The top 5 will occupy 50-60%, and then the long tail. So as long as we get meaningful in the 6, 7, 8, in the all banks put together, and continue to be most admired by multiple stakeholders, shareholder, employee, regulators, the full works. I think that's what I would like us to be, and I think the board is signed up to being that, and I'm sure Manial will carry the torch for that.
So what is the handover to Mr. Manian? What is that one thing he should do and what is that one thing he should not do?
No, we've had, thankfully we've had a very nice transition over the last 3 odd weeks. We both concur it's a damn good platform to play off. Momentum can be higher. Like any other new leader, he will find areas that have been underdeveloped, and there are areas that need to be sort of red zone that he needs to calm off. I'm sure in your conversations with him that will come out, but I think we agree that platform is strong. There are no ghosts in the system. We have a good runway ahead to grow. Team is, like I've mentioned on earlier occasions with you, average age of the bank is 34. Every year we reduce 1 year in age, right?
The 40s, you want it down to 30s.
We were 46 when I came in,
Yes,
right?
it's gone
So we're
to
now at
34.
By the time money and
So which
settles
means
in,
I cannot apply to
yeah,
the
you
bank
and I
now.
can't. Right? So we'll be a 34, 33-year-old bank. So the energy of a 33-year-old bank, I don't know if you watch a Novak Djokovic interview, the best time in life is 36.
Yes.
And I think that's the 36 zone we are in. So I think the message to
But
Manian,
Djokovic still managed to defeat Alcaraz in the Olympic
Correct,
final.
yeah.
So age
So-
doesn't matter.
it does. At 37, he's starting to lose. So we have to be careful. But anyway, the point I think Manian and I agree is that we are in a good space. The space, time ahead, opportunity ahead is exciting, interesting. And we see no reason why we can't meet our aspirations of being a prominent pan-India bank. And certainly there will be areas like unsecured and microfinance. Those are businesses I'm sure he'll scale into. And of course the industry challenge of how to cope up with the deposits momentum if you want to keep this credit growth growing. So I think that's where we are. But I want to believe that we are, it's a clean slate that he's picking up from.
So I'll focus on the liability part, and bankers are saying, oh my God, we are losing our share to mutual funds. Mutual funds are saying they've just scratched the tip of the iceberg. They're just getting 3-4% of what was overdue to them. Insurance is saying that I'm losing to both. The liability is limited. And the liability now, how Indians are saving and investing is getting different. How difficult it will be for Federal Bank, or for that matter, any bank now, to really reboot itself in this war of liability?
See, I have a slightly different view. I think the nature of liabilities is shifting from probably little retail to more wholesale. The money is still in the system, it's getting wholesaleized, so to say. But it would be different for different banks. As a relatively smaller mid-sized banks have the challenge of share gain, right? Even if the system is growing at 6-7%, banks like us who are challengers can grow share.
Okay.
So I would say our challenge in growing deposits is probably different from an SBI, which is at 20-25% market share. For getting deposits, liabilities, fund basic stuff, reach, digital or physical, and relationship, and offer, and products, and segmentation, the usual stuff. I think smaller banks or mid-sized banks who are 1-1.5% share will not panic, should not panic as much as the 5, 10, 15, but they have to defend. We are the aggressor. And at the system level, you have to accept the fact that the deposit profile is changing. I mean, it's probably getting a little more wholesale. The cost of money will go up. But the cost of money going up has to be compensated with either higher pricing on credit and or more efficiency. So I think system is not like dry on liquidity. It's cost of money is going up. So that we have to deal with. And that's it may normalize in a couple of years. That whole model can change. If the economy is growing at 7-8%, deposits, money creates money.
Yes, yes.
Right? If you don't have credit, you're not going to create money. So I think if the credit expansion continues in the mid to high teens, which I think it will, mid to high teens in the passage of time, you're going to see deposit creation follow. Nature of deposits, cost of deposits is another problem, but I think banks are sort of getting ready to deal with that.
Federal Bank is an old private bank. Was an old private bank. There is a bit of a legacy there, but then the turn I think has been evident at least in the last 5 years on all account. Cost, liability, brand, reach, market share, aggression, production, products. What has changed for a bank which again has a big old legacy track record? Why the turn has happened in the last 4-5 years?
So I think, Nikunjan, if you go back to the flywheel effect, right? This is playing through. We've been quite consciously, at least my approach and the board's approach has been not to do anything in a knee-jerk fashion in a very established franchise, which we must admit has done remarkably well in its core catchments, right? I recall when I joined our bank, we were in the sub 7-8% market share even in our home market.
Okay.
Today we are 16% market share in our home market. So it's not like the growth has come at the cost of one geography. We made sure we're dominant in our home geography while we scale up in the rest of India. So the transition that has happened is over the many years, we've recruited people from pan-India. We've trained to meet the market needs. the energy and the enthusiasm has been sustained. So like a flywheel, once you engage it, you can't stop that juggernaut, right? So I think it's in that space. And the next phase will be crank that up. You're moving at a good speed, cranking it up without accidents. So the engagement levels are good. And that's why I use the flywheel effect as the best description of, like they say, no? It's gradually and then suddenly.
Yeah, you overestimate in the short term, underestimate in the long term.
Yes.
So are markets underestimating the rate of change in Federal Bank in the long term?
I've always argued that, right? I've made very strong cases to most of our investors or prospects saying, don't go by 1 quarter, 2 quarter, 3. And we've seen, with the luxury and benefit of time, I can say with some kind of confidence, look back over the many years, I won't pick names, but big brands which ran up like crazy, fell faster, right? So sustainability is crucial. Credibility, sustainability, and ability to stay the course are paramount in banking. And if there's something that we take pride is we haven't done any knee-jerk stuff. I remember in 2013 when the industry was going gangbusters, we degrew deposits. I remember that quarter, the last quarter, March, investors and some ex-employees wrote me a stinker saying you should leave the bank now. You are degrowing. And I made the case that don't build the business on bulk deposits, let's build it on retail. 3 years later, it paid for us. So I think we have to have the institutional courage to say long term is good, which means some near-term sacrifices, which usually works.
But you are growing at a rate which is phenomenally higher than the industry average. I'm using 12-13% as the industry average. Your rate is closer to 20%, and you're sounding confident that a 2 to 3 year kind of visibility is there. So how are you growing when in general the industry is getting slightly cautious, both on the secured loan side and also on the unsecured loan side?
I think we are not, 20 doesn't have to be 20, it could be 16, 17, 18 also, right? We will grow at 400, 500 basis points higher than the market. That's why we're gaining share. In most of our businesses, we are still less than our desired 2% share. So if you take any business, we are still, except non-resident, where we are a dominant player, we are in a small, share is small. So if India grows at 7, forget any other number, right? And add inflation for 5%, 11-12%
is given.
11-12% given, that much deposit creation, that much credit creation will happen systemically. Good, credible, mid-sized players can confidently grow 15-18, depending whether you want to be on the 15 or the 18 part of the spectrum, is an appetite and how the situation plays out. And some businesses, we are still low. Our microfinance, credit card, personal loan put together is about 11,000 crores, our size.
Just say that number again. So
Microfinance plus credit card plus personal loans put together is 12,000 crores. And that's less than 5% of our total book. Our total book is 2,25,000 crores.
So that can easily become 4 or 5 times.
And it still will be a small share of the market. So for us, it can go 3x over a reasonable period. So you may see high growth on that, but as long as that is sort of controlled growth and not heady stuff and doing stuff, we try very hard not to do open market sourcing for most of these businesses. It's usually on a database that is either with us or a qualified database. So you have some sense of the people you are reaching out to and not like trying to go blind and play that. As long as that philosophy and keeps improving, I don't see any reason why we can't take these businesses to 30,000 crores over a reasonable period of time. But the incremental 20 we do, maybe 20% share of the incremental, say, 100 we will do. So to that extent, I think it's possible.
I've had the pleasure and honor of tracking Federal Bank, and last 14 years I've tracked it very closely. But there is one question which keeps on coming up and up. You've dismissed it, it keeps on coming up. You've dismissed it, keeps on coming up, which is that what will happen to Federal Bank? Is it up for grabs? Is there M&A happening there? I'm sure this is one question which you also addressed,
many
but
have
this
asked
kept on coming.
It will keep coming. I always think about it as a very attractive bride. Many people want to check it out, but the bride is very strong and confident.
But was it up on the acquisition?
Never to my knowledge.
Never. Last 14 years, whatever press speculated, whatever market speculated, Federal Bank was never up for sale. It will never be up for sale.
We are fiercely independent, very board managed, no shareholder dominance. It's a publicly widely held company. So unless there's a compelling reason for anybody to consider anything, We've always been well capitalized, bank has performed well, and I think, to my mind, any acquisition, whoever does it, must have a good reason, right? Why would they acquire in a hostile? You can't do any hostile takeover in India. It has to be a consensus between both boards. Our board has been very clear on why we should stay independent. If something extraordinary comes up, they will consider, but I think never, and I don't see any reason why I should.
But this question kept on coming up. You have kept on dismissing it, but kept on
I
coming up.
still do it, and I guess money and too will.
But they say that there is no smoke without fire.
And unless it's happening behind my back, I don't know. I've been very closely engaged in the bank in every sense. I have never.
So once and for all, we can dismiss this thing that Federal Bank was never up for sale, and it is never. It will not be up for sale.
I said this in a Onam program 2 years back, and I said this 3 days ago.
Onam just got over 2 days ago.
No, there also I said 3 years back. I said we will come back again and again and again into this platform and continue to be fiercely, strongly. And I said now there's even more proof. The best banker of the best bank has joined us to run us to a great space. So I don't think we've not to my knowledge. I don't think.
So let's look at the numbers here. When you took over, the top profit after tax for Federal Bank, from there now, it is almost up 10 times. Which means, despite those dark years of banking sector between 2014 to 2018 or 2015 to 2018, Federal Bank has given a CAGR profit growth of 20% plus. On this low base also, do you see that happening? Mathematically, is it possible? Logically, is it possible?
Yeah, we've, like you said, CAGR of 18% plus. We haven't had any negative year. We remain well provisioned on all counts, not just credit, even for wage and all that stuff. I think this kind of momentum is possible. We are not into this crazy growth period, and if we sustain this 18-20% CAGR for the periods ahead, looks very possible.
But there was a dark patch, and I remember on the other side when we were asking you questions, you had to take some write-offs, especially some, for some metal companies and some steel companies. There was some corporate loan issues which had come for the industry and for Federal Bank also. How are you ensuring that it does not get repeated? Because, economy, it follows a cycle. What looks great today may look bad tomorrow. So how will you ensure that in the next downturn you're protected? Unintentional, but you need to protect yourself.
I think valid question. So the toolkit available today, not only just internal data, market data. See, the benefit of CRILC and CIBIL and the modern day availability of data and information, you must be either living in a cave or blind not to use that. Right? I think banks have wisened up to it. Even if we don't, the regulators insist that's happening. So I think the best thing that's happened over the years is the public sharing of content that nobody in their wise sense can try to do stupid stuff unless they want to be cowboys, which is not in our DNA. So I think availability of information, underwriting capability of the bank is infinitely better. You've seen through this entire period, Nikunj, other than the top two, HDFC and Kotak, no bank has had better than us in gross NPA. Forget net.
Yes.
We have never crossed 3.5% gross NPA. And in an industry which had 11, 12, 13% gross NPA.
20% plus for some PSUs.
So that speaks to the fact that we haven't been very courageous in taking credit, and there's a downside to it. It's a conscious trade-off. We didn't chase the margin game. We went out of the credit quality game, which I think is the right thing from our point of view. So my confidence comes from the fact, even today, if I look at my early warning signals, what is on the dashboard from, as we were sharing with my successor too, mercifully, it's looking good. We don't see any names on the windscreen which is looking...
So there is no fog on the windscreen.
Pray it stays that way.
Every banker, I have been told secretly that they have a nickname. What was Shyam Srinivasan nickname in Federal Bank?
I don't know. If you find out, tell me. They only said, they were saying nice things to me, so I don't know what they call me behind. But we'll find out. Today, tomorrow, when the farewells, they may start telling me.
Maybe I'll ask you a question.
Yeah. We may know.
Second innings, what's your plan?
Nothing at all. I am very much, I'll continue to be associated with the bank through FedFina, our subsidiary. Other than that, as of now...
Taking it easy?
Yeah, as of now, my calendar street, Buddha, nobody wants to give me a job, right? So
that's experience. Experience and wisdom.
And I don't have anything on the lined up. We'll see.
What is that one big change you expect in the banking industry in the next 5 years?
I think this whole story around infra and banking, how is it going to marry? Right? If India has to, it's a non-negotiable, India has to grow. infra pickup has to be at a scale many times over. The two ends, one is the infra side and the other is the inclusion side. Right? These are two ends of the spectrum that have to see much higher play. I don't have the answer, but I know that something material will happen in the banking space in these two.
You know, globally, bankers are always suited-booted. हमेशा suit pant है, tie लगाते हैं. Do you see that image changing?
I would like it to be this way. I am a conservative, old world. I love my suit and tie. In fact, my wife keeps asking, what are you going to do with all your suits from Sunday or Monday?
How many suits do you have?
A fair number. I am a suit man, right? So I don't have other clothes. If you tell me to take off my suit, I won't have a regular shirt and trouser to wear. Okay. So I'm a suit guy.
If there's a billboard on which a message is written, which you can associate with, what would that message be?
Take your passion, make it happen.
Was banking your passion?
Absolutely.
So it's your passion which in a sense has been the reason why you've excelled.
Absolutely. I don't know excel, but yeah, I've enjoyed.
What would be your advice for someone who wants to build a career in the financial stroke, the banking space?
I'll say this, I may sound boring. In every platform now that I have the privilege of giving gyan and people are listening, I keep saying, please pass the can I tell mom test. That is my only mantra to all my colleagues. Whatever you do, you should be able to go back and tell mom, I did it, and not feel shy. And mom should say, beta, well done. So my simple message to the whole world, particularly in banking, which is a trust business, forget all textbook, moral science, compliance, regulations, keep that aside. Do whatever you do, ask yourself, can I tell mom, will she be happy? If yes, do it. So can I tell mom test is my personal script which I'm giving repeatedly. Some are buying it, some are saying bullshit, but that's my script.
How does your day start? How does your day end?
Prayer in the morning, prayer in the night. I'm super focused on the Lord above.
If somebody wants to reach you, how can they reach you after your tenure gets over?
Mobile is 24/7. I don't know if they'll want to, but yes, my mobile will be there. Yes.
And one final question, which is when you look back if you look back at your life history, and if Shyam Srinivasan of 2024 has to write a letter to Shyam Srinivasan of 2000, how will the letter start? How will the letter end?
Yeah, good question. When some of my younger colleagues ask me, sir, if you were 21, what would you do? And the only thing I tell myself is, maybe I was a touch more arrogant then, coming out of the IIMs and you thought the world began and end with you. You realize life teaches you, boss, it's not that easy. So I try to tell myself, be more humble and, long way ahead, but stay the course. Don't give up, never give up.
You know, all I can say for me, I've interacted with you in your Standard Chartered days, and Federal Bank has just been such a privilege. I've always appreciated the fact that you've been very honest. You've been very, methodical. You've called a spade. When there was bad news, you acknowledged it, and when there is good news, you're simply, sharing with it. So it's been such a pleasure and an honor to track your journey and to just have a friend and a mentor like you. Thank you very much. Thank you so very much.
Thank you.
Thank you very much.
Thank you, guys.
Thank you very much.